FirstRand, which of course is one of our major banks. I think it's the largest by market capitalization. It's had a tremendous run over the last decade. We're talking, of course, about its 4 business units, which are First National Bank, Rand Merchant Bank, West Bank, and then you can add Ashburton Investments, which is the piece that you've been tacking on at the end. 283.3 billion rands worth of market cap. Price earnings ratio 12.65, dividend yield 4.47. We've talked about this one because they perceive to have the best technology, the e-bucks and all of that, the branches where they try and get you online and all that. Although we know that there's some legacy tech underneath that whole infrastructure, which they're maybe not so proud of and don't talk that much in public of. Plus, there's some valuation concerns currently given sovereign debt risks and all that stuff. How are you feeling about FirstRand?
Look, I mean, if you look at the core metrics, in terms of the top big four banks, the best ROE, so clearly leveraging technology and the capital efficiently. So they do seem to be a cut above the rest. I think with those significant investments in technology, including a mobile app, which is very handy.
So that's how they get a better ROE, which stands for return on investment for the uninitiated. ROE, return on equity. That was embarrassing. But the point simply is that if you're pushing people out of the branches and onto the app and you're solving more of their daily work flow with a lower cost, then it's going to benefit you.
So those branches are expensive to run, and getting people off them onto the internet, onto their mobile phones, is going to push up returns. I think also importantly in their recent set of results, what they did say is they continue to make significant investments for the future, which sort of dampened their 8% earnings growth, which they reported compared to previous earnings growth, but they are continually focusing on the future, which is important.
Look, the other thing about them is that they didn't go into an expensive global expansion mode, as, for example, Standard Bank did about a decade ago. So they kept here local, and they've got very strong franchises in Westbank and vehicle finance and asset finance generally, and RMB gets a lot of the mandates for corporate work.
That's right.
So the investment banking franchise is strong. Let's look at the share chart. It's gone a little bit off the boil at the end here. The real gains were 2010, 2011, 2012 through 2015. Now, what about the tail end there of the chart, though? Is that, I mean, what happens if we get a S&P sovereign downgrade? Would that not raise the cost of funding for all of the banks and put a slip under these recent share price moves?
So, I mean, I think the current environment for the banks is difficult because it's somewhat binary, as you're saying. So, and we've had Fitch and Moody's sort of given their opinions, which actually they haven't downgraded us. So those have been positive. So we've seen the rand strengthen and actually the banking shares appreciate recently. Obviously, political developments is weighing heavily because that influences the rating decision. Absolutely. So. So I think we do have to see. I think, but if S&P hold and retain the current rating, we could see these banking shares continue to appreciate.
But remember, S&P have made it painfully clear that their concerns aren't so much with politics. Yes, that is a rider, but they're also really more concerned about economic issues like growth and tax collections, and those don't look all that firm. So I worry sometimes that South Africans, we think we're somehow sort of special or something, and we have a bit of good news or nothing happens for a while, we just kind of assume that things are going to go well.
I think
sometimes the benefit.
The government did do a lot of work in terms of a charm offensive to try and convince the rating agencies that they're doing the right things. And if in terms of the ratings, it's only a 6-month cycle, so kind of it's a stay for another 6 months. So my sense is that they may sort of pause and say, okay, let's see if they follow through with some of their commentary. Maybe let's see what happens politically, and we'll make a decision.
Plus, commodity prices have been better, and
that
is quite
so
favorable.
The terms of trade are
hot or not on FirstRand at current levels?
I think they're the best of the top 4 and valuation.
In any event, in our portfolio, we certainly wouldn't sell them. We'd hold them through some kind of a drama like this. So let's go hot on that one.